Hey, welcome to another edition of the Small Money Big Dreams vlog. I'm your host Morgan Spanam, and today's topic is just current market conditions and how should you react. Today is May 4th, 2010, and it was a crazy hectic day in the market. The Dow Jones was down 225 points. The Nasdaq was down 75 points, and at one point in the day, the S&P 500 was down. 95% of the companies listed on the S&P 500 was in the red, which equates to 475 companies out of the 500. And it was a panic day. Analysts were telling people to sell, get out of the market, and all kind of craziness. And I want to tell people that, you know what? You can relax. It was a rough day and things do look a little bleak, but I want you to realize that when things look bleak, not to eliminate completely your investment strategies, but to be more careful, assess the situation and be less risky. This is the kind of time where I tell people to, strictly remain with the blue chip stocks, the high market cap stocks, 10 billion or higher, and just concentrate and staying within these areas so that while the storm is going crazy, you can weather the storm, still pick up, still continue to invest while remaining in a safer platform. If you feel the stock market is too turbulent for you, maybe you want to take your money and invest in some short-term bonds. Excuse me, I'm stumbling on my words today. Maybe 3 months, 6 months, a year, just so that you can give the market time to correct itself. This point in time is a great barometer of how the market is correcting itself. A lot of people are reacting off of the Greek debt situation and how people are skeptical of it, and the possible collapse of the euro, and all of these speculative things that could occur. I still think that you should still be investing, just investing safer. And you know what? Even if you feel that the stock market is too turbulent for you, I would say if you don't want to get into bonds, still continue to put money away that you want to invest in on a later day. And if you want, put it in some interest-bearing instrument. I wouldn't put it in anything too long-term, because you do want to be able to have the flexibility of investing. Some of the winners in the current situation: News Corp, which showed increase in profits and increase in revenues, and the big reason was, what caused for News Corp was their blockbuster hit Avatar. Avatar is the parent. News Corp is the parent company into the parent company of the film company that produced the movie Avatar. And going forward, that Avatar 2 coming out, so News Corp looks very appealing. The stock is currently trading around $16.28, which is still within our small money big dreams investment price. Even though their advertising revenues were down, they were still able to increase revenues and profits by charging different fees for transmission fees, as well as having the blockbuster Avatar in their portfolio. The companies that look really good during this time right now are 3 consumer good companies, which lets you know that even though the economy is still unstable, consumption is starting to pick up. So I would say be a little bullish towards consumer goods. The 3 players I would say to look into, even though the stock price might be a little bit higher outside of what we look at small money big dreams, but Walmart, Costco, and Nike. So even if you can't accumulate high numbers of these stocks, maybe you could start off purchasing 1 or 2 and just continue to add these stocks into your portfolio as we go forward. Another big players into the market were Pfizer and Merck, which are pharmaceutical companies, the number one and number two pharmaceutical companies, which kinds to show you that the market is trending towards pharmaceutical companies. And you also got to think, once pharmaceutical companies are doing well, the companies that provide you venues to purchase pharmaceuticals, such as a CVS, a Rite Aid, a Walgreens, look into those stocks as well, because the correlation between the two. Oil, I would look into oil companies as well, because with the natural disasters that are happening in United States, especially the southern states, and just the speculation of oil prices to be dropping down, I think it's a time to get into oil. I always like to say people to get into oil before the summertime, because the consumption of oil usually goes up during the summertime. So if you could get into some oil stocks now, that'd be a good position to be in. And I just want to basically say, overall summary of this vlog is that remain patient, assess your risk, and invest cautiously. And I would say concentrate on blue chip, high market cap stocks. Continuing to look at the PE ratios of the stocks. Like I said, I like to keep it single digit, under 10. Price to book, price to sales, closer to 1. The beta closer to 1. And also, another thing that I want you guys to monitor is look at the 52-week high and low of the stock. It kind of gives you the barometer of, okay, besides for the current economical factors, how does the total outlook of the company has been over the whole year, as it's dealt with different economical factors. How has the high and the lows been? If the high and the low has been pretty close and remains the same, then you know what, this company is performing and valued at where it's at, and it's a stable company, more so rather than a company that's probably about to explode. But I would also look at companies that have, that's currently trading low but had a high value sometime in the year. If you check the other factors and they meet your criteria, then look into that stock, because that stock could be on sale and could be on its rise. And that's my summary for today, is to continue to invest, do your research, be cautious, and try not to shoot for the stars with the smaller cap stocks, which people might be saying this stock is about to burst, that stock is about to burst. If you are looking to invest in certain industries, I would say the top 3 industries to invest in right now are 1, pharmaceuticals, 2, consumer goods, 3, the oil industry, and 4, even though the outlook is very bleak, to find a strong performing financial services company, because with all this regulation that's going to happen, I feel the financial services will take a hit, and then once the market is regulated even stronger than it is currently being regulated, I think it will be on the rise. Once again, this is your host Marvin Spanam, and I hope the information I provided to you is helpful. See you guys on the top.